What's going on, everybody? It's Jeff here. Welcome back to the channel. Rocking Monday to start off the new year. In this video, I want to go over a big question I continuously am getting asked as of recently, and it is all related to third-party data providers and more specifically, the short interest. There's two things I want to cover. One, I don't think people are looking at this from the proper perspective, and I will explain that in just a moment. And then two, I'm going to give you my prediction in what I see that is going to happen if crackdowns do not change the way the reporting is required. We're going to get into that in just a moment. Let's get started. I do want to cover a couple of the plays that we had today. And also, I did start a new format for everybody inside the group, calling out specific expiration and strikes to look at if a stock were to move to the upside and break resistance or move to the downside and break support. As you can see, this one right here, Tesla 1200 just hit 1200 just a few minutes ago. IMMX was a great pre-market runner that ran into early morning. And I want to really highlight this one thing here for everybody to pay attention to, okay, is the heavy volume. Always look at volume. I see a lot of people call out tickers, and I end up looking at some of these plays and there's very low volume. And that's where it can be very, very difficult to time and understand exactly where the stock is going to move. So just keep that in mind going forward for the new year. Lastly, this was another play that got alerted to us probably around about 685, which was awesome, ran it all the way up to 955. This was another stock that was heavily shorted, which is why I wanted to mention that. But let's get into this, talking about these third-party data providers. So first off, I've used Fintel pretty much, most exclusively. As you can see, I do have a paid plan. I'm not going to reactivate it because it gave me the information I was looking for. I know a lot of others have followed Ortex, and I never had a subscription for that, but I did take some screenshots and show them my video about 3 to 6 months ago. But there's a couple things that are happening. And the first thing is that all of this information is self-reported. And so far, there is nothing in place to hold them accountable. So whatever these funds want to say, okay, to be able to report their information, and it all has to do with a risk reward, meaning if they have a very small position that they might be, green on, okay, or let's say even on, they might not want to be able to hide that position because of the fine that they'll get. But if they have a big position with heavy, self-interest to hide, they'll go ahead and manipulate, their self-reporting. And if they get hit with a fine, I mean, it's a slap on the wrist because they're risk reward. Okay, so unless that's what I'm talking about when there's changes when it comes to, all right, the SEC, obviously they haven't done a good part of their job, but the changes that need to happen in order to add more accountability to the self-reporting. But continuously, I've seen a lot of people be talking about these short squeezes, okay, and looking at what their score is and how high up they are on the list. And I think that people are missing the perspective, and the angle that I'm looking at this is all of this should just be momentum. Meaning if ISIG, which has been running pre-market almost every single day for the past, 5 or 6, trading days, you just play the move. Just because it's number one on the list doesn't mean that, if it dips down, it's down 50%, you load up on it because it's going to rip, because more times than not, you're going to actually lose out on your position. Okay, so keep that in mind going forward. The other thing I want to clarify is, are funds paying off these third-party providers? And I've seen some information about the owner and the CEO of certain platforms, okay, that might have self-interest in their own funds or might be partnered with other funds, and how that might quite work. And while we don't have any proof, at least as of yet, which retail traders, all of us apes, have done a great job unturning every single stone, answering pretty much every question or every answer to the questions that have arisen because of the research and the DD and the diving that we've done into to be able to try to find some of these answers. We don't have any hard evidence on that. Okay, so I do want to clarify, because a lot of you have reached out to me asking that question. I think it's being passed around a little bit on the internet, but it also just makes me think that, like I said, it's self-reported, and these third-party providers, okay, just have a simple job of being able to provide you information to help you trade. The more numbers, the more they can confuse you, the more charts that they have. It's all about an advertising, to where as long as their information is mostly accurate, they're not focusing on trying to make their information the best information, out there to be able to provide to, retail traders or so forth. Their goal is to be able to continue to market their product, be able to show how it can help you, and then worry about the, accountability and accuracy on a later date. And you can even go into looking about that from a marketing perspective. What is the average turnover when it comes to, anybody who is a paid subscriber of this platform? Okay, as you can see, I did it one time and I won't be doing it again because some of the information that I got versus the free version was a little bit better, but it really wasn't enough to, be able to make me want to, do this again, no matter what the cost is. Last thing I want to say, and here's what I think could potentially happen going forward, and we all have to be careful, is because these funds have seen retail hit these stocks so hard when they become, number 1 through 5 or even 1 through 10 on the list, it wouldn't be a surprise for them to start actually false reporting the other way. Meaning, if they're, let's say, short 1 million shares, they might only report short 100,000, right? Which is something that we've been accustomed to, in the past, and something that we've seen most likely happening, obviously, with AMC. But what if the narrative changes? Okay, they see us continuously hitting, okay, or retail continuously hitting the top 5. What if they're not short at all and they actually decide to go long on a position but decide to report 500,000 short to be able to get it to be boosted higher, knowing that retail is going to tag onto this? Because everything when it comes to trading is a theme or a trend. And like I've always said numerous times, the market runs in cycles, and this cycle will eventually end and or change going forward. So like I said, Relly was a good one. It's not on the list right now, but if you look at it, you can see there was zero short or shares available. And if you look at the borrow rate, it's just astronomical. And this was passed around as being high on the list. I don't know what platforms they were looking at. Like I said, I just use Fintel, but that's where it got a lot of action happening in the stock today. And as you can see, it doesn't take much to move this, because even though, let me zoom in a little bit for you, you can see, I mean, this is what I talk about: low volume, 500 on the 1 minute candle, 1600, 2000. I mean, even getting into here, 200,000 shares on a 1 minute candle is really not a lot of volume. Okay. And just to clarify, when I talk about volume, I will look at, the OBV and the overall volume compared to, what's relative to the average as an indicator for a move later on in the day. But when I'm actively looking to get into it, I look at the 1 minute blocks, because you really want to make sure you don't get, stopped out by one guy that decides to market order out. But like I said, let me digress, that this is a stock that was heavily shorted. It was talked about on the internet, and that's why I got the move, to the upside. And be careful, because I can definitely see the narrative starting to change, and especially if accountability doesn't happen with their reporting. As of right now, they are talking about a couple things to happen, but I think it's ridiculous. I think their time frame is sometime at end of Q2 in 2024, which is absolutely ridiculous. So just keep that in mind going forward, and please don't utilize this list, just to whack every single position expecting a short squeeze, to happen. So guys, that's it for this video. I'll see you in the next one.